All right, welcome back to Stick Talk. This is episode 5. This is actually episode 1 of our new setup. So in the comments below, let us know if you guys like this setup better. I think it's pretty cool. The chairs are a lot more comfortable. And so, yeah, we switched it up. And I'm actually going to have Christian introduce our guest today because it is Christian's birthday. So I'm going to give him the intro privileges.
Christian. Thank you guys. Yeah, I mean, I'm just gonna my intro is always saying welcome on our guest Simon, and I'll just have you kind of intro yourself, your background, how we got connected, how you know our good friend Josh Ordonez.
Oh, that's right. That's our connection. Yeah,
That's
sweet.
Story. So, I don't know, how far do you want me to go back in terms of introduction? Because I can go on my whole life story. I'm sure nobody wants to hear a 20-minute breakdown. But nonetheless, to cut it short and sweet, was born in Russia, lived there for 13 years. Was born in Russia, lived there for 13 years. Parents got divorced when I was 2. My mom brought me to the U.S. when I was 13 to pursue higher education because in her mind, college and education in America was the path to freedom because obviously growing up in the Soviet Union, if you weren't educated, that was one of the, I guess, biggest things that mattered back then. Obviously, times have changed. So came to America to pursue education, was 13, moved to New York, didn't know anybody, didn't know English that well. Pretty much lived in New York for 5 years until I was 18, 19. Graduated high school there, went to college for 7 months before dropping out. Yeah. So pursuing higher education didn't work out. Sorry, Mom. But I guess we're on to better things, right? So the first 6 months in college, first semester, I was going for mechanical engineering, just because that seemed like a highest paying career and something I was sort of interested in, but up and going 6 months, I realized that wasn't for me. So the next best thing in my mind was business. So I switched to business, but at that time I was already dabbling in business on the sides on my own. And so I switched to business, and I realized that I was learning more driving to and from school, listening to business podcasts, sort of like the one we're recording right now, opposed to a lecture from a college professor who has never ran a business, who has no experience running a business, and frankly has no idea what he's talking about in terms of relevancy to today's world application of business. Yes, he may have a conceptual understanding of how a business is run, but he's never started a business, so why would I be taking advice from him, right? The apple doesn't fall far away from a tree, so I wouldn't go to the gym and take advice on how to get a six-pack from a guy who's 300 pounds overweight, even though he is, in theory, he may know, like, hey, you need to be in a caloric deficit, you need to work out with progressive overload, and you need to do these things, but he doesn't have the outcome I'm trying to get, so why would I take, advice from him, right? So that is, I guess, the biggest takeaway from the age of 18, 19 was pick people who you want to learn from that have walked the walk and have talked the talk, right, and have the experience that you're trying to achieve. So that was kind of the biggest takeaway for me then. I dropped out of school. I was 18, about to turn 19. That was, I believe, February of either December, January, February of 2018. But I was like, I'm not dropping out just to go home and sit and play video games all day. I want to scale a business, so I still need to learn. I just dropped out, and I wanted to switch the place where I was getting the education from. So I was like, I'm not going to learn from a college professor anymore, but where am I going to go learn from? So I was like, I need to find mentors. And I was looking online, was trying to see who can I learn the next best thing from, pretty much. And during that time, Grant Cardone was promoting his 10X Growth Conference. I'm like, what better way to get into business and learn from a lot of billionaires and experts than to go to an event where all of them are going to be there, right? So what I did was I took my last savings, I think it was like $3,000 to go buy a ticket, fly to Miami, go to the 10X Growth Conference 3, I believe.
What year
3.
was that?
That was 2018, end of 2018. Okay. So I went to that event. That was his biggest one where he packed out the stadium. It was like 30,000 people. I'm not sure if any of you guys went there, but
I think was that the one we were at? Was it at Marlin Stadium, like the baseball park
in Miami?
Yeah.
I believe that was the one.
Yeah.
That's nuts. That we were literally there. And it's funny that you mentioned that, like, you just got rid of your savings for it because you knew that you wanted to be in that environment.
Right.
I had a tweet, like, I don't know, it was probably 3 months ago. That same exact thing. I was like, I had like $600 in my account, and like $450 of it with the student discount and all these different discounts that I could find went to that ticket. So
but the biggest thing is, so I went to this event, but I realized that, hey, this isn't much better than the college education anyway, and I'll tell you why. Even though it was an improvement, I was learning from now people who are actually running companies and businesses. I realized that, hey, this is not the best environment to learn in. There's 30,000 people, and it's not personalized and catered advice.
Yeah.
I can't go up to Grant Cardone or one of the speakers and be like, hey, so here's my real estate portfolio. Can we sit down for 20 minutes one-on-one? I'll show it to you. You can give me advice. He'd laugh in your face and say, hey, it's going to be $200,000 an hour if you want to sit down with me, right? And all the event was, in a way, not to bash, events, majority of events, but it was a sales fest, because what happened is speakers went on stage, gave generic advice to 30,000 people, because you can't go into many details and specifics, right? Because everybody's a different phase of their life. Somebody's 20, somebody's 60. You're not going to give the same advice to a 20-year-old as a 60-year-old. So it has to be general information, right? Not very specific information. And then they went on stage, pretty much said, hey, I make millions of dollars doing so-and-so. If you want to learn how, you got to buy my course or join my program. Or, that was also back then when Ty Lopez had his thing, and Russell Brunson was, pitching from stage. And pretty much every speaker that went on stage, gave some quote-unquote free value with generic advice, and then made an offer. And I was like, well, I just spent all my money here. I don't have any more money to buy more stuff. And I was already expecting to learn something
It's
by
like the
spending
shittiest feeling, right?
Yeah, thousands up front. I didn't really meet quality people because I didn't get to have quality conversations, because everybody that came up to me was just trying to pass business cards without like any context around it.
Yeah.
It was like, hey, take this. It was like an exchange of business cards. I'm like, what is this for? This isn't how events should be, and this isn't how networking is done. Like, there's a better way to do this. So I was like, you know what? Fuck this. Let me do this better on my own in my 18-year-old mind, like how I envisioned events and learning should be, how I wanted to be taught and learn. So I was like, let me throw my own event and do it by my own rules, and, call my own friends and people, and, to be at the event, and my own speakers, and kind of, pave the path on my own. So that's when NetCon was born, right after 10X Growth Conference 3. And after kind of having that realization that, hey, traditional education isn't that great. The education out there with events and conferences and seminars, it's better, but it's not what I would want for myself. So let me create something. NetCon was born. The composition of two words, net standing for networking, and con standing for convention, conference, whatever you guys want to call that. So hosted my first event 4 months after that. Had 14 speakers, a little bit over 100 attendees that all paid money to be there. Couple of things that were in mind launching these events was that, number one, we wanted the attendee to speaker ratio to be very low. So the attendees have the ability to go up to the speakers, sit down with them one-on-one or 1 to 5, like we're sitting down right now, and be like, hey, here's what we're working on. You've obviously had so much more experience ahead of us. Let's work, and you can give us tactical, practical advice that we can take and run with right away, not some generic bullshit, right? Yeah. So let's say if you have an e-commerce speaker speak, people can bring their laptops and be like, hey, so here's my Shopify dashboard. What am I doing wrong? What would you suggest, changing? They can, in breakout sessions, sit down, and the guy would literally be like, click this, edit this, and change this. And hooray,
yeah.
Right? And you don't have to go through these rabbit holes and spend thousands of dollars and unnecessary stuff to get the desired outcome, right? And then the other thing is, we didn't let, and we still don't and never will, let any speakers sell anything or pitch anything from stage. I myself don't sell anything at the events, so the events are more, again, attendee-oriented, experience-oriented. We're not there to sell stuff, right, to the attendees. Obviously, it brings in leads for other businesses, but we're not there making offers. I know that if we just deliver a great experience to the attendees, they will come back. They will inquire on what other products and offers and services you can provide for them, right?
Yeah.
If they found the event valuable. If not, then it is what it is. But so far, it's been great. We've hosted 5 events since then. We've had big ones, small ones. During COVID, we took a break with those and going to be restarting again soon, pivoted from there, but we'll go into details on that in a bit.
I just want to go back to, you said 4 months after 10X, you had your own event. How did you, because for us, we threw an event in October, and getting people to come, getting speakers locked down was a huge undertaking. So I just want to get your take on, or hear your experience with your first event. Like, how are you able to land those 14 speakers? How did you get 100 people to pay to come, as someone with fresh out of, dropping out of school, not a ton of experience yet? Like, how did you build up that brand so quickly?
Right. Well, while I was in college, I was already dabbling in trading stocks. I wasn't really, successful or as successful with it. At that time. I was making a little money here and there, was losing, pretty much a break-even trader by then. I wasn't losing constantly because that was the year prior when I was still in high school when I got into trading.
Yep.
I was pretty much blowing through savings and money. But when I got to college, I was at least not losing money. I was making a little money, making some progress, obviously nowhere near to where I'm at right now. And I was posting that stuff on social media and online. And by that time, I've had a couple of thousand followers organically from just content and advice I was posting and just sharing and documenting, hey guys, like I'm trading this, I'm buying this. This is not financial advice. This is just, if you guys want to tag along and kind of watch, it's here. If not, then cool. And again, I was always on social media during college because I knew that there was people that are making it, right? There's some things you can't fake, right? Mm-hmm. People that are making it and posting the results on social media. So I was always kind of aware of, the possibilities that are possible with leveraging social media, with building a personal brand, with being active and having followers and having attention, because attention became a new currency last decade, right? So I was already dabbling with that. In terms of getting speakers for the event, it just comes down to networking and leverage. I would say at 10X, I met the guy named Fernando Valencia. He has hosted many events of his own. We kind of kicked it off. I messaged him. I'm like, hey, so what did you think of the event? He was like, it could have been better and so and so. I'm like, I agree. I want to do it better. Would you want to help me? He's like, I'll help how I can. How can I help you? Right?
Yeah.
And I was like, well, you've hosted many events before. Would you like to MC my event? So he was the guy opening, with the microphone, welcome to NetCon. We're introducing the speaker,
Yeah.
blah, 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 right? So that was him. And then I'm like, this guy's very well connected. Let me see if I can tap into his network, because I don't have a network yet, and I don't have credibility. I haven't hosted events. There's this guy who hosted over 200 events and MC'd many events and spoke on stage with Tony Robbins and everything. And he wants to give me a shot and believes in me. He wants to offer me his help. Let me try to see how I can leverage this. Because obviously, if I reach out to a person who I follow, who I want to speak at my event, they're not going to take me seriously. I don't have credibility. I don't have a reputation. I don't have, the know-how, per se, on how to do this well. But there's a person that does. So let me see if he'd be willing to put in a good word for me, or just invite those speakers to speak at my event. Obviously, the first event, just being full transparent, we didn't have we had some great speakers, and we didn't have, we had 1 or 2 oddballs that were like, now in hindsight, I'm like, I kind of wish those people didn't speak at my event. But obviously, that's a learning experience, and that's how you build up. But the 3 events after that, once we already had a track record and we had something to show to people, because if you're inviting, I don't know, somebody who you all may be familiar with, I don't know, just Gary Vee. You invite Gary Vee, it's like, hey, speak at my event. He's going to be like, how much am I getting paid? How many events have you hosted in the past? Do you have pictures, videos, testimonials, like anything to show me, so I know I'm not wasting my time and you're not just a tire kicker? Because I respect my time. I don't want to be wasting my time if there's nothing in there for me, right? just like a normal business person would. So when we had that, obviously at the first event, we documented, we had cameras, we had interviews. I hired a person to go to every attendee and ask them questions and document them, and we put together clips, put that online. So, organizing that whole team was, a process of its own, and figuring that out and refining that over time. But for the second, third, and fourth and fifth events, we already had that reputation that we could leverage, and then reaching out to speakers, it was a no-brainer, because to them, you're offering value because you're bringing them potential prospects, even though they're not going to be selling from stage. They can build awareness about what it is that they do, what products, offers, and services they may have in store down the line. They may be able to get content for their own personal brand, whether it's, positioning themselves as an authority figure, speaking on stage, helping people. So for a lot of people, it was, a win-win. Yeah. People want to speak at events because for them it's a win, and for me it's a win. So I like to put myself in scenarios and positions where it's a win-win for everybody. Just like this podcast, for example, for me it's a win because, hey, I get, new eyeballs from your audiences. I get to repurpose this content, hopefully, and post on YouTube and TikTok and Instagram. And for you guys, you get different guests, and I may refer 2, 3, 4 more people to come on here. You may build relationships with those people. They may bring you more business. It works in very weird ways, and I don't go into those relationships in a way with expectations of like, oh, I'm gonna go into this podcast and I'm gonna make this many clips and they're gonna send me this much business. I don't go into any relationships with expectations like that, and that's, I guess, the other important thing of like building genuine connections and relationships without expectations of taking, but also going in there with the intent to serve, the intent to offer, the intent to give before you ask, in return, like with even the smallest little things. Like, for example, Christian, yesterday I was with my friend and I was like, hey, do you need somebody else for the podcast? He can come right after me and you guys can record another episode. That's, subconsciously, but also being aware now of what I did. I was like, hey, I'm offering you value. I'm offering to bring you another guest to the podcast, right? So it's that give before the take, right? I didn't ask Christian like, hey, can you send me the footage, or hey, can you like shout me out, or like I didn't ask for anything of that. If anything, I'm very grateful for you having me here already, right? So that's my way of reciprocating. I'm always trying to lead with value and see how it can give and serve, and that's I guess one of the biggest reasons I've been able to grow so far is because every relationship, friendship, interaction, whatever it may be, business or personal, I go with the mindset of servitude. How can I serve this person? How can I help them? And also asking the right questions. I always ask, what is your biggest struggle? And then the person gives me a list. I'm struggling with this, and then I subconsciously think, who do I know that I can that can help them? Because providing value to people is not always, oh, you're struggling with something, I'm gonna help you. Guess what? Sometimes you may be struggling, I don't know, with launching an ad campaign. I personally have no clue how to run ads. I've never run an ad. I outsource it to my media buyers, but even though I personally cannot run an ad for you and help you in that department, I may have people in my network that have the know-how, so I can facilitate an introduction to somebody that can help you with your issue, and automatically I become valuable to you because I made that introduction. So for everybody watching, it's like, if you want to be valuable, and again, people say like buzzwords, oh, you got to add value. You got to, add value to people. What does that really mean? Well, adding value just means you're helping a person solve an issue, but guess what? You don't necessarily need to have the skill to solve the issue for the person, because in this world of social media and attention and, it's very easy to be exposed to so many people with so many different skill sets, but I can automatically put myself in a position of being valuable to you by making an introduction with someone who has the skill to help you, right? So because a lot of people are like, oh, well, I talked to this guy, he needs help with, I don't know, social media or video editing. I don't know how to edit videos, I can't help him. I'm like, no. Who do you know that knows video editing that you can connect him with that can help him? And then, he makes an introduction of that person, and that person's like, oh my God, thank you. This person, helped me so much with what it is I was trying to solve. And then automatically you're the go-to guy in their head. It's like, oh, if I have more issues, problems, whatever, Simon's my guy. I can reach out to him. And that's how you get referrals. That's how you get, people speaking well about you when you're not in the room. That's how, you grow your brand, your reputation, because I guess, goodwill in terms of referrals is so much easier to compound than something like capital, right?
Yeah.
It's much easier to get 100 referrals to your business from word of mouth, from doing good business, than get 100x return on your investment in, let's say, the stock market or the real estate market, right?
And I feel like it all starts with like that first relationship, right? Like that's the toughest one to build. Like with your first event, right? You didn't have any connections in your network that you could bring in as speakers. And so that event was a lot harder to push and make successful than your fifth event. And this is something we experienced. Like we have a coaching program and we held our first in-person event just like 2 months ago.
I saw that. Congratulations.
Thank you, bro. Appreciate it. So like that first event, or when Christian and I first started a podcast like 4 years ago, like getting guests on our podcast was so difficult because we didn't know anyone. But then we get a guy like Simon on our podcast, and Simon's friends or Simon's connections sees that he's on our podcast, they're going to want to come on. And then those guys have networks. And so like there's a compound effect with building a network and doing certain things in business. It's just like, how do you do it the first time successfully? And I think that's where a lot of people get stuck or struggle. I have a little more of a technical question, again, because we did host an event this year and it's something that we want to do more of going forward. And I think like events as a business model is a really interesting conversation. And so I'm interested to get like your take on this. Is like when you host events, is that like an upfront profitable model, or what is your intention with making a profit?
With events, So with events, we actually, on all events except for our last one, we lost money.
Same,
So,
yeah.
Like
a lot of money.
events are expensive, and that's why, again, for the audience, you shouldn't be particularly upset when speakers do pitch or sell or whatever, because the majority of the money at the events is made on the back end, not the front end ticket sales. Typically, from hosting many events, from being connected with people that run large events for people like Tony Robbins, right? 99% of events will lose money on the upfront ticket sales, but it will make up for it tenfold on the back end, coaching programs, upsells, sponsorships. Sponsorships are big, so you guys should be looking for sponsors locally and nationally that's catered towards what it is that the content you're putting out, right? And sponsorships in any department help, especially for someone that's, not saying you guys are small, but relatively speaking to a Tony Robbins event, we're small fish. So anything from venue to food to, whatever sponsorships you can find, that's very useful in that department. But yeah, even for Tony Robbins event where tickets are, $2,000 to $5,000 to attend, and you have 40,000 people in attendance, they lose money on the front end of the ticket sales. But then again, Tony Robbins goes up, has his mastermind that's I think $80,000 a year. People sign up for that. That pays for additional expenses, because you got to realize, guys, events, there's a lot of expenses that attendees typically don't take into mind. There's the venue. So for example, for our Los Angeles event, we spent $25,000 on the venue, just to have a nice penthouse on the 31st floor with nice views that attendees would be happy about. And we kind of got screwed with our previous venue, like canceled on us like 4 days before the event. I was like, gotta improvise. I guess we're going over budget, huh? Then food. You have speaker, everything speaker related stuff. So travel accommodations. Yeah. So tip for you guys, we at this point do not pay for any speaker travel accommodations. None of that stuff we cover, and I'll tell you why. Because with the caliber of the speakers we want at our events, if you need me to pay for your travel and accommodations, you're not at the level of the speaker type that we want at our event anyways, right? And if it's like, oh, well, yes, he's a $50 million or $100 million CEO, therefore you need to pay for his travel. It's like the travel I would offer you would not suffice your level of comfort you want to travel in, because
so you offer them a speaking fee?
We don't pay for speakers at all.
Gotcha.
Right?
Okay.
So your value is getting them in front of your audience.
Exactly. For them, it's like, I had Dan Fleischman speak at the event. Dan Fleischman was like, listen, I don't need anything. I just want to speak there, give value, get content. For him, it's like, I want to get content. I want to shake some hands. It's a passion project for me. Repurpose it, get credibility, post it online. I make, $100 million a year. It doesn't matter to me. Like $1,500 flight and hotel.
It's not going to do much.
Doesn't put a dent in the bucket at all, right? And the thing is, it's like even if they asked me to pay for travel and accommodations, as a business owner who's trying to have margins, I'd be like, okay, you're flying Spirit, coach, and we're putting you in like
no carry-ons.
Yeah.
I think paying for it would be less of a it'd be a worse impression than not paying for it.
And we're putting you in a 3 or 4 star hotel, like or hostel.
You can sleep on my couch
or whatever. It's like we paid for your travel and accommodations. What do you expect? Like we're not putting you in a in a first class and a Marriott. So if you're at that level and you're the big baller that you say you are online and to your audience and your content, then you might as well be a big baller and pay for your own travel and accommodate yourself to your own standards and liking. Because again, your standards are most likely going to be way here, whereas the standards that I want to offer you to be within any reasonable budget, to not just go broke overnight, is somewhere here, right? So it just doesn't make sense in that department.
The expenses what was the water bottle expense for our event?
Oh, we had like 1,300 on Voss water bottles.
Yeah, so we ended up hosting our event at the Marriott, and like the way it was
JW?
pitched, no, just the one right across from it, the Water Street Marriott, and like the way it was pitched is you spend X amount on lunch boxes per person, which comes with like drinks and like snacks like for the day. And so it's like, all right, and in the back they have like these freaking like coolers of Voss water bottles, and so like everyone's just like free game, like I'm just gonna drink a bunch of water bottles because we didn't know we were getting charged per. So yeah, we ended up spending like $1,800 on Voss water at our first event. Our first event was like $40,000, which was like you said, we took a loss on the front end.
So what is your goal with the events like at this point?
So the initial goal for the first event was like, we're in the money Twitter space, right? Which is just like basically a bunch of guys on Twitter that run online businesses and do online coaching. And we've been in the space maybe for 2 or 3 years now, and there's never been like an in-person event that people have hosted. And so we're like, we want to be the first in-person event on money Twitter. And we have a coaching program. We have 181 members in the coaching program now. And so we felt we had everything we needed to bring together at least 100 people to Tampa and do an event and source speakers from within our own community and all that good stuff. So our goal is just to be the first to do it. And then now our goal going forward is just, we have this coaching program that is all virtual. It's all online. It's in Slack. It's in Zoom. There's coaching calls, all that jazz. But really the true value is in-person connections. And you probably experienced this as well. It's like those connections you make at your events compared to maybe like in a Discord group or through Instagram, like even talk about that. If you feel like you have something. I will
talk about that because what just happened in front of us is my good friend Ryan just walked into the room.
What's up, man?
So Ryan was an event attendee at my last event in Los Angeles. We were complete strangers. Now we've become best friends, have done a lot of business together. Somebody that I wholeheartedly can call one of my best friends at this point. Attended many events together, sent each other so much business, helped each other overcome so many hurdles, right? And that all came from hosting an event.
Yeah.
Right? And putting yourself out there, providing some sort of value enough for the person to recognize, hey, I want to be associated with this guy for whatever it is that he has to bring to the table. And again, just always having the mindset of servitude. How can I go above and beyond to try to help this person opposed to try to withdraw value from them? I never ask people for like, hey, like unless it's a dire situation, I never ask people like, hey, can you help me with this or do this for me? Like, I don't ask for favors often, but when I do, I've already made sure that I've at least given the person that I'm asking for favors 5 favors in advance, so they feel, not even responsible or obliged, but they feel genuinely wanting to reciprocate and help.
Yeah.
In any way that they can, right?
Yeah. I feel that within our coaching program, like I have just this week actually. We have a bunch of guys in our coaching program that we work with for like the past year, and like I'll provide a ton of value on coaching calls or through audio notes or text messages or whatever. And he was working on something that I thought was super interesting. And I kind of ran through my head the same exact thought process that you just explained. Like, yeah, I've helped this guy enough. I feel like comfortable asking for something in exchange. And it's cool because like he was so excited to be on the other side of that value exchange. Like, yo, I can finally provide value back and almost like pay you back for everything you've done for me up to this point. And even small things like after the call, sending him a $50 Starbucks gift card and small things like that just go such a long way. And even Scott, who's behind the camera and produces our podcast, like he joined our coaching program like 4 or 5 months ago, came to Tampa for one of our events for the very first time and is now producing our entire podcast and shooting most of our content. He did the entire event. And so, like you said, just crazy the connections you can make in person.
And again, it's just a ripple effect, right? Like from here, for example, I can hit up Scott and be like, hey, you know, like I have a podcast of my own that I'm starting, or I have this content. Would you like to come shoot with me? And then he may be exposed to more opportunities that way, you know, to meet more people that want to recruit him and, you know, bring him business. And with you guys, we may host an event together. Who knows, right? Yeah. But it's like, again, don't go into those relationships with expectations of like, this is what's going to happen. This is how those people are going to help me. No, just go into it genuinely trying to get to know the people. And again, not to be a broken record, but with a mindset of servitude and take it from there, right? But I would say networking is super important, but a lot of people kind of jump into it way too fast because networking, in my opinion, is pretty much almost useless unless you have at least some sort of a skill. If you don't have any skills, networking is useless because there is no value you can provide for anybody, and there is no reason for you to even be networking, right? You should be putting your head down, focusing on building a skill, whether it's a high income skill to make money for yourself and be an expert in lead generation, marketing, dropshipping, e-commerce, whatever it is, right? You just have to have a skill and be good at something. If you're not good or particularly good at anything, you should first divert your attention to building those skills and then going out and networking and having that network emphasize the skill you've built, right? Because network is leverage. If you don't have something to apply that leverage to, it's useless. It's like 0 times 0 is, what's 0 times 0? 0?
Is that the undefined? Oh, if you divide by 0, that's like the undefined. I don't even know.
Yeah. I was trying not to make that mistake. But yeah, if you're at 1 and you multiply by 0, it's still, 0. So you need to level up and then apply the leverages of, your network, leverage of people around you, right? Hiring people under you as employees, for example, or having referrals, or applying leverage in terms of capital, right? There's different types of leverage.
So this is actually a great topic of conversation because I feel like our audience is a lot of young entrepreneurs or people looking to get into entrepreneurship. And so the missing piece, right, that you're talking about here is having a skill set or having the value to provide to someone else. For you, it sounds like what it was stock trading and now real estate. So those are two options. But being in the event space and hosting events with young entrepreneurs, what are some other skill sets that are either trendy or in demand that you might recommend to our audience to go out and do some research in?
For sure. So any service-based business that you can get involved in is great. So whether that's copywriting, that may be lead generation, that may be marketing, that may be content creation, and anything to do with content right now, especially with the explosion of
short form,
needing a personal brand on all platforms. So again, transcribing videos, repurposing content, recording good video and audio, making thumbnails, anything that is a service-based business. Again, service-based meaning servitude, right? You can go out there and serve a person, provide them the value, and then get compensated in exchange. So there's that. Once you get good at that skill, it just comes down to how do you leverage that skill to get the best ROI for yourself. And there's 4 typically types of leverage. Naval talks about it a lot. I'm not sure if you guys know who Naval is. But, there's permissionless type of leverage, and there is leverage that needs permission. So for example, leverage that needs permission is capital and people. So there's people leverage, but you need permission because somebody needs to put you in a position of leadership for you to lead them, right? Somebody needs to follow you, so you need to earn that permission to leverage people, to hire people under you. Those people need to buy into your vision. They need to trust you. They need to, again, be on the same page. The other thing is capital, right? If you don't have a lot of money, somebody has to trust you with the money. Somebody has to give you permission to manage your capital, to have access to money you can deploy and leverage it to amplify whatever skill set you have. Then there's permissionless leverage, which is super great. That's what we're doing right now, actually. It's media, right? Any media format. So podcasts, interviews, any sort of content on YouTube, TikTok, Instagram, that is permissionless video, because you can just, get together, whether it's in a group or alone, record content, post it online, and get eyeballs, monetize it, and guess what? You don't need any permission to do that. Nobody has to give you permission to go online and post a video, unless you're on, I don't know, Twitter and you've said some bad things. But yeah, so that's permissionless leverage. Another one is code, right? You can write a piece of code to amplify whatever skill you have, whether it's building a software, right? And then that is also permissionless, because you build it. Nobody has to give you permission to write code. You write the code, and then it works for you 24/7. So to give you an example, let's break down a massively successful company, Meta or Facebook, right? They utilize all 4 types of leverage. They have capital, because they borrow money from banks, they borrow against their stock. They have a lot of access to capital from outside investors and people that are, they have a public stock. So when people buy the stock, the company can use that money to leverage it for whatever it is that they need to grow the company, right? They have people leverage. They have thousands of employees under them, right? They have media. They're a media platform, a distribution of media platform. That is why they're so powerful and can grow so much in terms of leverage, is because they leverage a permissionless form of media. And then code. There's so much code in Facebook, right? The application itself, all the ad campaigns, the algorithms, right? That's where a lot of leverage and value is in as well. So they utilize all 4 types of leverage.
Talking about leverage, I want to talk about trading, because for me, like during COVID, I got into some trading group where I was doing like calls and puts and blowing through my account in like a day. So I want to hear more about your experience. You said like when you first started trading, you weren't profitable, then you were break even, and then you're making money. So walk us through the progression of, being a trader that was losing money, and then being a trader that was breaking even, to now breaking, making a lot of money. Because also I want to get your take on like trading with no emotion. Because like for me, if I see one of my options start to tank, I like panic and sell it, and I just, it's like everyone has a plan until the stock doesn't go the right way.
Realistically, I've coached hundreds of people and have helped people get better with trading. I have adjusted my trading style over the years. It's evolved. I started off with just normal equities, buying shares, then transitioned to penny stocks, and then did that for 2 months, and then did options, and that's what I do still till today. And we help people through our coaching programs and businesses online to get consistent in the markets, eliminate emotions, and the whole yada yada yada. In terms of getting consistent in trading, it took me personally about 22 months, 4 blown accounts, and $20,000 lost to get to a point of just not losing money anymore consistently and just breaking even. So for anybody who thinks that, hey, I'm going to enter the world of trading in 4 months, I'm going to be making hundreds of thousands a month, you either need to pick a new skill or, set your expectations slightly differently, because you're setting yourself up for failure, right? A lot of failure, not only in trading, but in many skill sets, come from exceeded expectations that are set. And when they are not met, you get disappointed and you quit.
I feel like the latest bull run had a major effect on that, though. It's like every guru was winning on the SPACs and the speculative stuff, and everything was going up. And
yeah, I mean, a monkey could have picked the bucket of 50 stocks and it would have done 40% in 2021, right? And it's also, again, just to pivot a little bit, you need to develop the skill set of knowing when it is to be on the offense in trading or any sort of, I guess, business venture, and when it is time to preserve the capital you've built, to stay on the sidelines and just to be patient for opportunities, right? Because cash is also a position in trading and business. You don't always have to have your money doing something. Just money sitting there, waiting for the opportunity is your investment, right? For me, I didn't understand that the first, I would say 14, 15 months of trading. because every day I would wake up, I'm like, I have, let's say, $10,000 in my account sitting in cash. It's not invested anywhere. Therefore, it's not working for me. I need to put it somewhere. So then I'd go out of my way, even though there's no opportunity. I'd try to just shove that cash into forcing trades, shoving it into anything, because subconsciously I'm like, oh, this money is sitting there. It's not working for me. I need to put it to work. Whereas as I grew older, got more experience, I realized that it's not necessarily about that. It's about selecting the right opportunities and having actually dry powder and cash available on the sidelines that you can deploy when it's needed. Because what would happen is I would deploy money into opportunities that were not worth it because I was looking to just put it somewhere and allocate it, because for some reason I felt so fringy just having cash. So then when the actual great opportunity presented itself, I didn't have, money to utilize for that particular opportunity, whether it was a investment outside of trading into a business, into my own business, or a stock I wanted to trade during that day or during that week, because I had all that money sitting somewhere else, right? So an important factor is always have dry powder on the sidelines, especially in times that we're in right now in a recession. It is super important to have dry powder and quote unquote ammunition. I'm referring to money here that you can deploy, because again, money is a form of leverage. So that's that. In terms of, to circle back to getting consistent at trading, eliminating emotions, things of that nature, you need to realize that no matter how much experience you have, how good you have gotten, you're still going to have losing trades. You're going to lose money. That's just a part of the game. You have to accept that. The key is to manage risk and manage your losses accordingly. For example, you don't even need to win more than you lose. You can lose more than you win and still be a profitable trader, as long as your risk to reward ratio is great, and you know how to properly manage risk. You can win 4 out of 10 trades or 3 out of 10 trades and still be a profitable trader.
Like me setting a stop loss or whatever.
Not even that, just making sure that the risks that you're taking with the capital have a greater reward than the money you're risking. So for example, if I'm buying a stock at $100 and I'm putting my stop loss at $99, I'm risking $1, right? But I need to make sure that that particular stock has the opportunity to run to at least $103, $105. So if I'm wrong, I take a $1 haircut. If I'm right, I make $5. That way, let's say
5 to 1.
Yeah, let's say over 10 trades, I take 10 trades. I'm right on only 4. I'm wrong on 6. On the 4 that I was right, I made $5 a trade, so I'm up $20. On the 6 trades that I'm wrong, I lost $1 or even $2 a trade, so I'm down $6 to $12. I'm still up overall, right? So for me personally, my win rate, it's not that high, but I can probably pull up my stats for this week, and we can go through, the trades, because I actually had a great week in terms of trading, and I had the same amount of red trades as I had green trades, yet I came out being up $34,000 for the week, just because the losing trades that I had were like down $300, $400, some were down $50, $100. The winning trades I had a $16,000 trade, I had a $13,000 trade. That just shows you that, again, I had the same number of winning and losing trades, yet my winners are drastically larger than my losers. And that comes down to, again, identifying opportunities and proper risk management. Cut your losers quickly. Cut your losers quickly, and make sure you always have dry powder on the sidelines. So that's been a big learning lesson for me as well, because in these times, I wish I had more capital to deploy into opportunities in real estate and my own business, and investing in assets that are super oversold. And because I put myself in a position, obviously I have access to money, but I would have been so much better have I 12 months ago prepared a little bit better and had rotated some money out of things that I'm up 400, 800% on in, crypto and stocks and things of that nature, have more, powder on a sidelines to be able to deploy it into further opportunities.
So if you're somebody who's just getting started, I'd imagine that you're recommending they start just trading shares or trading equity as opposed to trading options right off the bat. Do you think it's a good time to get in the market? If you're still at that beginner phase and you're just going to be, you're not going to be making options, because obviously if you're doing that, you could be making money whether the market goes up or down. That takes like a high skill set. Or would you recommend another investment vehicle like real estate or like investing into, a business that you have? Like what's kind of like your thoughts on the market right now?
Right.
And if you're a beginner and have some capital, would you get involved in the market at this moment?
Yeah, a couple of things. Number one, in terms of the stock market or real estate or any market in general, the best time to get involved is in a recession because the majority of millionaires, billionaires, great businesses were built during a recession.
You think we're in a recession?
Yeah. The other thing is, kind of lost my train of thought here. But no worries. You're good. Learning to trade stocks in a recession or being involved in any business, you're learning during the most difficult sort of time when markets are very, very volatile. There's no consistency. You're up one day, down another day. But if you can push it through this time, when markets come back to a bull market or a more stabilized market, you can do extremely well because you learned under the most brutal conditions possible, right? And you conditioned yourself for, and you've experienced, things that some investors that got into trading, let's say in 2011, they've never been in a recession because the previous recession was only in 07, 08. They just got to the point where they are trading in their first bear market. No matter how good of a trader they are, they're trading during their first recession. So they have no prior experience trading in a recession. You can now, in a year from now, boast about it and go brag that, hey guys, like I survived a recession trading in the stock market. You've accumulated more knowledge during that 6 to 12 month period of time through just observing and being involved in the markets, in any market, whether it's, again, just scaling your business in a recession or the stock market or the real estate market, that you've gained an exponential amount of experience in a very short amount of time. So you've compressed your learning curve. In terms of picking a skill set, whether it's trading, real estate, you need to pick a skill set that you genuinely gravitate towards and enjoy, not because of the financial opportunities in it, because you got to realize there's money to be made in e-commerce, dropshipping, marketing,
anything.
Coaching,
Plumbing.
Exactly.
Podcasting.
Podcasting, plumbing, I don't know, making swords, making cigars, whatever it is, right? Watchmaking, flipping watches, flipping shoes. There's money everywhere. It's just pick what you're intrinsically curious about, want to get better at, and focus on becoming better at the skill opposed to chasing the outcome of how much money you want to make.
Yep.
The biggest pitfall in trading is people go into it wanting to make a certain amount of money. It's like, oh, I can just sit on my computer, click 2 buttons and make $3,000, right? Let me do that. And they put so much emphasis and attention on the outcome of, if I take this trade, I'm going to make $5,000. If I, take this trade, I might make $10,000, instead of focusing on the fundamentals that drive you to make better trades and be a better trader, to manage your risk like a professional, to identify opportunities better, to be better at technical analysis, right? And the thing is, the people that are focused and too much outcome driven, they are the ones that end up quitting early because they didn't get the outcome. And again, they set expectations to get a certain outcome. For example, people starting to trading. First year trading, I want to make 6 figures. A lot of people make money with with trading. My goal is 6 figures by the end of the year. They trade for a year, they blow a bunch of accounts. I didn't make 6 figures. Trading's a scam. Got disappointed. Let me go try something else.
Yep.
E-commerce. Oh, people are making thousands here. Let me go. I want to make 6 figures. I want to make this. They start doing that, focusing so much on money that they disregard the skill that's required to get to the money. And again,
And keep it.
Exactly.
Yeah.
So
in a way, it's a great time to get into it because, like you said earlier on, like 2021, a monkey could have picked a bucket of stocks and would have performed really well. But right now, if you are going to make money, it's because you're just getting plain lucky. Like that may happen, obviously, but it's more so because you're forced to learn the fundamentals. So over a long-term time horizon, those type of trading habits are going to be much more successful.
It's like not even about the profit. It's about the learnings and making it through the recession to then leverage those learnings to win in the bull market.
Exactly. So, for example, last week I had a $4,000 loss on a trade. It was a great trade. That was an amazing trade. I lost $4,000, but it was an amazing trade because, number one, I followed my risk management perspective. I cut the trade exactly where I said I was going to take the loss because if I didn't, that trade would have turned into a negative $20,000 trade, right? So, number one, I respected the rules I set out. It was a great trade because if it was right, I risked $4,000 to make about $15,000, right? Again, it's just a numbers game. So you take more trades, you take $4,000 loss here, another $4,000 loss, another $4,000 loss. Guess what? You take one trade that's, a $15,000 win, you are already in the green, right? What if you take 2 of those or 3 of those? You amplify that over 100 times. But the thing is, again, I'm not focused on the outcome of, oh, I wanted to make 15 grand. I'm so obsessed with the process of refining, what could have been better here? Where could have my entry been better? What was my psychology like during the trade? Why did I, for example, if it was a different trade, why did I close it before it hit my profit target? Why did I walk away only making 11,000 instead of 14? Because I set out to make 14. Was it because I got, scared that it's going to go back down to 0 or go back down to negative? Was there a news catalyst that came out? Understanding my own psychology and behavior, right? Constantly journaling about that and improving it and now analyzing it and having data to support itself. So for me, I treat trading like a controlled science experiment. I have variables that I track, and then I manipulate those variables to see what kind of different outcome they would produce. I record that data, and I make data-driven decisions based on what I've recorded and I've observed to make adjustments.
On a daily basis, which I think is the most important part.
Not even on a daily basis, because some things you need time to collect data. So typically for me, it's a 30-day mark where I really sit down and do a deep dive review of all of my data. And then I, for the next 30 days, change 1 or 2 variables. So for example, in trading, the variables might be like how long I'm in a trade for, how much money I'm deploying in a capital, what trades what names I'm trading, what direction am I trading? Am I trading long or am I trading short, right? What is my strategy? Am I trading the morning opening drive where there's a lot of momentum? Am I trading, again, penny stocks? Am I trading options? What instruments am I trading? Yep. All those things are tracked and documented, and you need to develop a system around it that fits your trading style and personality. Because again, if you give all of us a $20,000 or $100,000 or $2,000 account and say, go trade, go make some money, each one of us is going to have a different approach, different strategy, different, psychology. Some people would be like, oh, I want to just be in and out of a trade in 2-3 minutes and go on with my day. I want to make quick, 200 to 300, $500, move on. I have other things to manage, other business ventures to be involved in. Some people are like, I can be in front of the computer for 7 hours a day. I don't care. I'll, look at it. Some people are like, oh, I work a full-time job. I can only swing trade. I can only, take 1 trade a week, take it on a Monday, check back on it next week, and close it for a profit a couple of weeks down the line, right? So there's different trading personalities that you can adapt.
What kind of personality are you?
So I've actually transitioned. Mainly, I'm an options scalper, so I capitalize on small price movements. I'm not trying to catch a whole move from, let's say, $100 to $110. I want to take a small piece of the pie with enough size in my trade where it would matter for, in terms of returns, right? Right now, I've transitioned a little bit more into swinging and holding positions for longer just because of my time allocation being involved in a lot of real estate projects. I have a lot of meetings during the day. I can't right now be in front of a computer for 6 hours or 3 hours a day looking at charts and trying to capitalize on every intraday opportunity. Right now, for me, 1 to 2 good trades a week with a good amount of size in that trade is what gets the job done. But once, again, we can touch up on real estate a little bit, but once I have those projects out of the way, probably closer to March-ish, I should be pivoting back into scalping because that's what I truly enjoy. And again, that's what I teach our members in the group. And right now it's kind of hard, for people to feel like they're involved every single day if I'm only posting, 1 trade a day that I'm taking. And by the way, we don't do signals. We don't spoon feed people. We don't tell people buy this, sell this, in our programs and groups. We focus on building consistently profitable traders that are self-sufficient, that do not need hand-holding and spoon-feeding. Because the other reason for failure I see is people want to join groups, whether it's Discord, Telegram chats, whatever, where people post trades and handouts. But the thing is, I personally worked hard for my money. So why would I give the authority to make the decision of what happens to that money to an external force, to somebody else? Because if I'm joining a group and somebody, I don't know, posts, hey, buy this stock at this price and sell at this price, and I go do that, they made the decision for me. And therefore, if that money goes to zero or I lose some money, a lot of people are like, oh, this guy's terrible. This guy's, not a good trader. It's like, that trade might have been great in the long run, or for him, or for somebody with a different account size or personality. That's why, again, with signals groups and chats where people spoon feed you, there's a couple of issues that I found from observing, hundreds of students that have come into our programs that have tried signals groups that haven't been successful. So, for example, one of them being that the person giving you trades to take is trading with a completely different account size. So, for example, if I'm telling you what to buy and sell, and I'm trading with an account that's $100,000, but you only have $5,000, and you go try to copy the same trades. Let's say I take a trade, I have $100K to my name, and I'm okay taking a $4,000 loss in this trade. I have $96,000 left. I'll go take more trades, and I'll make it back over time. You, on the other hand, you take the same trade with a $5,000 account, you lose $4,000. Guess what? You only have $1,000 left. Yep. It's like you can't afford to make another mistake. Whereas me, I have a lot of room to continue making mistakes because I know that over time, with proper risk management, I'm going to make it back and make more. Right? You just, blew your account pretty much.
Yep.
And you got to also realize that risk management is super important in that aspect because, and a lot of people don't realize that it takes them a couple of times to listen through it. When you lose 50% of your account size, you need to gain back 100% just to get back to where you started. So, for example, if you have a $10,000 account and you blew 50% of it, right now you have $5,000, and you now have to get 100% return on that $5,000 just to get back to the $10,000 you started with. So if you're not managing your risk in the beginning correctly, and you need to be very diligent with it, you're pretty much shooting yourself in the foot for no reason, because it's going to be double as hard of a work you have to put in to make up for the losses you took, right? Like, you shouldn't be involved in very risk-on plays unless you've built yourself a cushion. So when you start trading and growing accounts, whether it's a small account, large account, the first step as a trader should always be, I need to diligently manage my risk as much as possible and make sure I'm not taking big hits and losses right off the bat, and building a cushion. Once you have a cushion built, that's the market's money you've taken. So let's say you start at 10K, now you're at, 18K or 20K with your account. Now you can put more risk on trades, and even if you lose, $2,000, $3,000, you're still above where you started. But then on those trades, you risk $3,000, you make an extra $9,000. Now you went from 18 grand to 27. That's how you compound your account. But if you were just starting with 10K and you were putting those risks out there, risking 2K, 5K on a trade, 2 trades will wipe you out. So that's,
It's like with sports gambling. You got to know your unit size.
Bro, I was thinking sports betting, Larry, this whole time.
I think it's always like, one guy, we sports bet, we're a little degenerate, but a guy will put out like, rough day, I went 1-7, back tomorrow. And me, it's like, I just maxed out my account. There is no tomorrow. It's like, But I just want to talk about what you said about picking a skill, because there's money and everything, right?
Right.
The biggest thing I think that's important is not to be in something for the money. It's to be in something that you enjoy, because the thing that I like to go by is there's always going to be somebody in your skill set that loves what they do and are willing to put in 12, 15-hour days at it because they love it. So if you don't love the thing that you're doing, you're already at a massive disadvantage because you're not willing to put in as much work as somebody who's obsessed with it. So kind of talk about that. Like, how do you know when a skill, like something you're doing is something that you're really loving and enjoying and can do for 10, 20 years?
It comes down to how easily you can get into the flow state with something. So for me with trading, I just open the computer and I can just lock in for 2 hours. That's not something I can describe on camera. That's a feeling you get. It's very hard to
procrastinating
explain, right? The other thing is just you need to try a bunch of shit before you figure out what it is that you truly enjoy. Like, I didn't know I enjoyed trading before I tried, again, I still like hosting events, but I like trading more, right? So until I hosted events, until I've tried marketing a little bit, until I've tried growing social media accounts and flipping those, until I've tried e-commerce and drop shipping and realized, hey, that wasn't for me. I'm not about, taking advantage of customers and just being a middleman reselling something from China. Like, that's not who I am, right? So, you got to try a bunch of shit. So put yourself in a position to learn, to expose yourself to new skills, to try different stuff, and then pick what it is that you enjoy. If it was 20, 30 years ago, I would say obviously you need to pick something that you enjoy, but also has monetary advantages in that career path. But nowadays, with the power of social media, you can monetize anything. There's people that enjoy serving people ice cream, that flip ice cream, and they,
Post TikToks and make all kinds of money.
Post TikToks of throwing ice cream to customers and they catch it and guess what? You're a millionaire.
viral.
There's people that are like, oh, I like talking to people and I like cars, so let me go ask what it is that you do for a living, driving such a cool car.
Yeah.
And, you make, 8 figures doing that, and you get, brand awareness and sponsorships and all those things that come with it, right? So again, just try different things, put yourself in new environments where you can learn. Try to get good at something. Don't hop between skills, every 2 weeks, 3 weeks, 4 weeks. Same with trading. A lot of people walk into a Discord chat or a Telegram chat or some sort of community to learn trading from. They try that person's strategies and things for 3 weeks. They don't work for 3 weeks, right? And then they're like, oh, well, this person sucks. Let me go try somebody else.
Yeah.
And for the whole year, they're like, oh, 3 weeks in this group, 4 weeks in this group. Guess what? They can't learn that way because every single person, as I said earlier, has a different trading style, has a different approach. So if you haven't spent enough time, learning from me and you go learn from somebody else, what you're going to be learning from them is going to sound like gibberish because we all have different approach and trading strategies and how we view the market, right?
Yeah.
And both of us can be right. But the thing is, you didn't give it enough time to figure out that, hey, this is what works for me, this doesn't work for me. So typically I would say at least 4 to 6 months is what it really takes to figure out.
Yeah, real quick though, on the topic of that, I feel like everyone that's starting out sees someone at their 100th level when they're at level 1, right? Like with you, they see someone trading, making 5 figures a week on trading. They look at ecom, they see someone making posting a 6-figure Shopify dashboard screenshot. What the people that are starting out don't see is that these people at level 100 were at their level at one point and they just haven't, I guess, posted their journey as much as they should, or they're just at a level that's so far away that they think that that's the lifestyle that's going to be associated with trading with e-com is going to be this luxury and these cars and these trips and these houses. But in reality, you have to eat shit, like Gary Vee says, for 4 to 6 to 12 to 18 months before you can start seeing those
4 to 6 years.
Yeah. And I feel like that's a huge, if any influencer isn't posting their losses as much as their wins, they're doing a disservice to their audience because they're creating this false reality that anyone in their audience can hop into e-com, hop into trading, and start seeing these returns, living this lifestyle right from day one, which is so far from the truth. So I want to hear your take on, sharing your profitable trades, but also sharing your learning lessons and your failures, because I feel like if you're not posting setbacks and failures and lost money, then you're kind of doing your audience a big disservice.
Right. I mean, I openly talk about it. My winning trades, my losing trades, everything's posted transparently on social media. Number one, it not only sets the right tone for the whole trading industry, because a lot of people and fake gurus out there just post, 32 green days in a row, and guess what? And then they're like, oh, guys, yeah, I need to take a social media break for a couple of days. I'm not in a good mental state. They go ghost for 4 or 5 days to come back, and I'm like, did you actually need to take a break, or you just had a bunch of red days you didn't want to post about, right? It's like, what's the deal here? So that's number one, setting the right expectations for the industry. Number two is, if anything, sharing setbacks and losses helps you build a brand, and being authentic and having that authenticity, really builds trust with your audience. Because again, people are not dumb at this point. Maybe, 5 years ago when social media was just the new hot thing, building a personal brand was the new hot thing. People were kind of dumber. Nowadays, even outside of trading, when somebody joins a VSL, video sales letter, or a webinar, they know they're in a webinar being pitched or being sold, right? They're aware of that. Everybody knows what a webinar is. By this point, I'd hope. So it's just about being authentic and not lying to your audience and building that trust with them. For me, one of the other things you asked is how'd you build that audience? Well, to host your first event, I built it because I built it on authenticity and transparency and not lying to my audience and posting, my lessons and my losses and things of that nature as well. When I took the biggest, trading loss, I think it was $220,000 on one trade. Right.
Wow.
I post about that, right? And I'm open and transparent about it. But
that probably got you the most engagement and you built the most trust in that moment.
Yeah. I mean, you have some people that are like, "Oh, you suck at trading. Why would I follow you? You suck, whatever." And then that's 1 out of 10 people, and then the other 9 are like, "Holy shit!" I've been dealing with the same things. I just didn't know if that's normal, or other people are taking losses as well. I didn't know if I was the oddball out and I should quit trading, or that's part of the journey. Obviously. 200K loss, to some people that's a lot, but again, given the account size, how much of your account size is that? How much were you risking? to make how much we're going to make. If I was right in that trade, I would have made upwards of like 700K on that trade, right? So, but the thing is, like, I've had trades that are on the other side of that where I've made, you know, 6 figures on trades. So you can't judge a book based off of one poor trade, nor can you judge a person based off of 2 or 3 good trades either, right? You need a track record. And with me, social media, again, is just a platform to show my track record. Because in a world where people edit screenshots, post fake, you know, results and paper trading accounts, it's super important to, again, there's so many mentors to select from online. If you have somebody who is transparent and authentic, you know, that's already half the journey done there, right?
Yep.
But again, in terms of selecting mentors I touched up on it in the beginning of the podcast, selecting mentors and people that you learn from is super important. Just make sure that whoever it is that you go learn from, whether it's trading or e-commerce or crypto or whatever it is, make sure that they have the results that you're trying to, you know, get. They walk the walk. They're not just somebody posting screenshots and fake Shopify dashboards and whatever it is. And again, they're authentic. They not only boast about and brag about their wins and success, but they are humbled by their losses. They are man enough or woman enough, I don't know, to share their losses publicly and admit that, hey, I was wrong. Like, I have no problem going on camera or going on my phone and posting, hey guys, yeah, I posted this trade. I was wrong. Here's how much I lost. Here's what I learned from it. On to the next one, right?
There were some people in our corner of Twitter that were posting fake revenue screenshots and they got exposed.
And I don't even think it's like posting your losses. I think what's even more important and like what people in our position, like as coaches and selling info products online, should really do more of is help set the expectation with the students that, like, when I'm a new student in your program and I'm learning options or the stock market for the first time, like, I have to realize what you're doing on a daily basis is a culmination of like 3 or 4 years of experience. So your wins and losses now, like, that's great, and people get to see like you win and you lose. It's not just wins, but what went into you getting to the position you're in today? It was a lot of time and effort. And I think like people that get into trading, they're looking for like quick wins and hitting the jackpot, and they don't have the patience or the work ethic necessary to stick it out for as long as you have. And so like when you enroll into a coaching program or buy an info product, like, really take the time to learn how whoever you're learning from got to where they're at today, and like understand that's part of the process. Like that's required work, right? It's not just going to be fast track to success just because they're paying $30.
Yeah, I mean, listen, people go to college for 4 years to get a degree in, I don't know, communications or something, or whatever it is that they math.
Yeah,
whatever it is that they pursue.
Calculus.
And you spent 3 months clicking buttons in your computer in your bedroom thinking you're gonna be a successful stock trader. Like, sorry, no, there's a disconnect here, right? Like, you need to put in time, repetition, screen time. If it's trading, a lot of screen time, right? And I would say, again, it's you need to, if you want to be successful in any field, like any field whatsoever, you need to put yourself in a mindset of constant learning and iteration, and just recreating yourself constantly and making sure that you're growing, you're analyzing, you're adjusting, and you are humble enough to admit that you're wrong, ask for help, ask for advice, and never think that you're the smartest person in the room. For me, it's like when I walk into any room, I never have the mentality of like, oh, I'm the wealthiest here, I have the most money here, I'm the smartest here. It's always, what do these people know that I'm maybe lacking? Where are their skill set strengths that I may be lacking? What can I learn from them, right? Opposed to, again, I'm the coolest here. I have the biggest, bank account and, the coolest car or whatever it is. None of that shit matters, right?
Yeah.
Put yourself in a mindset and mentality of constantly learning, constantly iterating, and being in a personal development mode.
Yeah.
What's the saying? Like, if you're the smartest person in the room, you're in the wrong room?
Exactly.
Yeah. So as we wrap, just because we're a little short on time here, I'm interested to know, because we recently moved down to Tampa earlier this year. I think you said you moved down, 2 years ago?
2.5 years ago.
2.5 years ago. And you're specifically are you in real estate in Tampa? Is that where you do most of your real
Tampa,
estate?
St. Pete, Clearwater.
So yeah, just kind of talk us through what you see in the real estate market in your future and in Tampa in general in the next 3 to 5 years. Like, what are you excited about? What do you look forward to?
Yeah, so just to give a little setback story in terms of my approach to real estate, I develop real estate and I do short-term rentals with those. So just to explain in a brief language, there's a lot of ways to make money in real estate, just like with anything. You can wholesale properties, you can be a realtor and make killer commissions selling high-end properties, you can fix and flip properties, you can do the BRRRR, you can do long-term rentals, just buy a property, fix it up and rent it long-term. You can do short-term rentals, Airbnbs, you can build properties from scratch. So the opportunities to make money in real estate are endless. It's just about picking, again, what you gravitate towards and what suits you the most. So for me, I've tried a couple of things in real estate and I figured out what works for me, what doesn't work for me, with my lifestyle, with my goals, with what it is that I want to achieve. For me, I specialize in real estate development. So that means I build new construction properties from the ground up. And how I do that is by either buying empty parcels of land in Tampa, St. Pete, Clearwater. I want to be in the local market because, again, I'm by no means a real estate expert. I've been in this for, 3 years. People have been in this for way longer than me, so I have a lot to learn. So I stay locally. But I develop real estate. I buy lands or tear downs, so old properties that have been built in, let's say, 1940s, 50s, 60s, that they are worth less than the land value, for example. So the house itself is worth, $200K, but the land that it sits on is worth $200K or more, right? So I buy these properties, I tear down, remove the old house, and we build new construction properties on those. And then instead of selling those new construction properties, I actually keep all of them on portfolio, and we run short-term rentals on those with VRBO, Airbnb, things of that nature. So that is my approach. The reason I picked real estate development in general is because I can leverage capital and other people's time, which is super important for me because I'm involved in other businesses. Real estate is not my full-time gig. It's a way for me to diversify and multiply my returns and put my money in dry powder to work. But again, the reason I picked development is I'm a busy guy. I trade, I run online businesses, I'm in coaching, I travel, I like having fun, I like, enjoying my life. If I did, traditional fix and flips, I'd, number one, have to be constantly involved in the process of renovating the property. And then guess what? It's going to be sold anyway. So you're letting go of an asset, you're paying short-term capital gains tax, and you put in all this time and effort to build something up. So for me, the ROI is not there in terms of the amount of time you put in just to let go of something and sell it. So for me, I keep all my properties for long-term appreciation, for all the tax benefits I get with that. And short-term rentals are a way for me to have flexibility also, because I today and tomorrow can say, hey, I want to be involved in a short-term rental business, but I can always pivot. If I'm locked into a long-term contract, for example, I have a tenant for a year or two, I can't, do anything with that property for the year or two that the tenant's there. I have to go through an eviction process to kick out the tenant or pay him to move out. If I, let's say, want to sell the house or move in there myself or put it on Airbnb, right? If I'm doing short-term rentals, I can always pivot, which, again, for me, it's a multitude of exit strategies. I can move in there myself into the property if I want to live there. I can, sublease it to somebody else. I can sell the property if I need the money. So I give myself a lot of opportunities and different routes to pivot to with short-term rentals. Other than that, it's also a great cash flow business model that returns much more money than a traditional long-term lease, and you get better protection because the Airbnb, VRBO, the platforms, they give you insurance on the people that are staying. So that's that. In terms of the real estate development aspect, I find the deals. I find the builder to build the properties. I have a team around me that I've built with experience thus far. Obviously, I started from scratch, but now I have builders, engineers, architects, electricians, plumbers. I have a team of all those people and contacts. So what I do now is I just find the deal, I fund the deal, and I pretty much have a general contractor who manages the whole project. He gets paid, and he runs the whole labor. He communicates with the plumber, with the electrician, with the painter, with the guy that does drywall. He organizes all that labor. He gets paid for it, and it takes 8, 9, 10 months to build a house. During that time, I only have to check in on the property once or twice a month, if that, right? So I leverage other people's time and my capital so I can use my time to be involved in other businesses, in trading, in coaching businesses, and traveling and creating content. But if I was, again, a one-man team, or if I was a flipper in real estate, or I was doing wholesaling, all those things are tied to my time. So if I'm wholesaling, I got to pick up the phone, ring potential prospects, get contracts, and therefore I'm sacrificing the time that I could be trading or being involved in other businesses. That's why I've, again, put myself in a position. I laid out all the pros and cons, and I said, do I see myself continuing to trade? Yes. Do I see myself continuing being involved in these businesses? Yes. Right? In order for me to continue doing these things, out of all the real estate business models that I've listed, which one suits this the most? And for me, that was the development aspect, because I still have control of my time. I get the greatest leverage because I have other people's time I'm leveraging, and I'm deploying massive amounts of capital to build something brand new, let alone all the benefits of owning a brand new property versus a torn down or a fixer-upper. Number one, your insurance is much lower on new construction properties because they're built up to code, right? So, for example, my primary residence it's a brand new 2019 built home, 4-bed, 3-bath, 3.5 bath, about 3,500 square feet. My yearly insurance on that property is like $1,800. I have a 1940s property that's 1,100 square feet. The insurance on that is like $4,500, just because it's older. It cannot withstand hurricanes as well as mine can. It will flood more easily. It's not as energy efficient. It's not built up to code. Number two, it's like I get a new construction property, so I'm targeting a different clientele. I want to focus on luxury experiences for people who travel and want to have, a nice new construction home with a pool and amenities, and people that are okay spending $600, $800, $1,000 a night on a property. And again, those are the types of people I'm targeting because I have pricing power, and those are the type of clientele, just like in coaching, you want to be involved in high ticket coaching and high ticket clients. You probably have seen that meme going around of like comparing a low ticket client and a high ticket client, where a low ticket client for $500, you send them the invoice. They're like, I want to know the exact breakdown of where this $500 is going to, like how much you're getting paid, how much your contractor is getting paid. And then you have a high ticket client for $50,000. You send them the invoice to pay. They're like, paid, thank you. So that's the difference of dealing with a high end clientele and low end clientele. And that's, again, my approach in real estate. I want to be more on a high end, because the people that have the money to travel, and they want the experience, they're not going to care if it's $600 or $675 or $800 a night for their stay, as long as they're getting the experience they want to get, right? The other thing is, again, I'm trying to cut it short. Last couple of things. With new construction properties, there's typically builder warranties, again, based on the contract you negotiated. But for the first year or two, the builder will offer a full warranty on a house. So let's say it was their fuck up. They messed up something with the roof or the foundation. That thing cracks, collapses, whatever. They're obligated at no cost to me to pretty much go in and fix that, right? Whereas if I buy a 1940s house, I have no clue. Obviously, I'm going to do inspections, but still, I'm at a risk of, things falling apart, and then I'm liable to, either pay out of pocket to fix those or go through insurance and have claims, and then my premium goes up, dealing with all those headaches, because I have no clue what's been going on with the property for the past 50, 60 years, how it's been maintained, what the previous owners have done to the roof or the foundation, what goes on behind the walls. I have no idea of any of those things that have happened to the property. Whereas if it's a brand new home, like everything is brand new. I'm the first person there, and there's no issues with it. So just to kind of wrap it up here. So that's the real estate.
It's a lot to
aspect.
unpack. I'm going to go back and listen to that, because I'm super interested in real estate.
Yeah, and we can obviously have side convos.
Yeah.
Look forward to building these relationships.
I was going to say,
outside of this.
Leaving it at, I think we'll see a lot more of Simon in our network, especially potentially like a NetCon, X-Client Ascension meetup or event in 2023. So definitely keep an eye out for that. But to wrap it so that people can stay in touch with you and follow you and learn more from you, where can our audience find you online?
Yeah, guys. So on Instagram, it will be at Mr. Simon Lerner. Just a quick disclaimer.
There's a lot of fakes.
Yeah. I will never message you first asking for Bitcoins or to manage your money. I don't manage money for people. Do not send me money. Do not ask me to manage your money. I do not trade for other people. I only trade my own capital. As I was saying, I didn't work hard for your money, so I should not be the sole decision maker as to what happens to it. So use common sense and logic. If it sounds too good to be true with me or anybody else you follow online, don't fall for, you're going to get 1,000% return in 3 days. All you got to do is send money to this address. Like, it doesn't work like that. I wish that's how it was, but unfortunately not the case.
Are you on Twitter?
I am on Twitter, not as active as I'd like to be, but now that you mentioned it, I need to be. It's at, I think, Money Trades or something.
We'll put it in the description.
We'll plug it in the show notes.
Yeah, because the other handles were taken. Website, netcon.com, netcon.com. Same on YouTube, Simon Lerner, NetCon on YouTube. We have 2 channels, one for my personal self, where, again, I cover the events we host. We do interviews with other traders, things of that nature. For NetCon, we mostly post, event testimonials, event videos, event recaps, interviews with our clients and students, and how they've been able to grow their accounts and trading tips and things of that nature. So, yeah, it was a pleasure being on the podcast. Thanks for having me, guys.
Appreciate it.
Yeah.
Thanks
Thank
for
you,
coming
man.
around, dude.
Appreciate it.
That was dope.
Awesome.
Good shit.
Appreciate you, man.